Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, June 12th, 2013. Well, a continuation of the trend to the downside today, and a candle that continues with a lower high and a lower low. That trend was established for yesterday's trading with a black body candle, and today we've seen the size of the black body increase. So today the sellers have made an amount of net bearish progress on the day between the open and the close, and they've increased the amount of net bearish progress over the previous day's trading, and it does suggest that there is good solid continued downside momentum in this market. The market has closed down towards the lows, suggesting that the sellers have closed with control and very strong control of this market, and it does suggest that there is a good likelihood of this market testing to the round number 1600 level of support. Today the market also took out this window that was opened up that provided support for the previous day's trading, and we have closed down below there in a very solid bearish manner, closing that window, and therefore negating the importance of it. But we do need to bear in mind that if this market does rally, the window does have potential to act as an area of resistance. But certainly now that the market has closed through there, it does negate the importance of it quite a fair bit. But the story here really is the size of this large black body compared to the previous day's trading, with the increase in momentum, and it does look as though there is going to be some solid follow through and at least a test down to the 1600 level. In terms of the Fibonacci extension today, we saw the market take out the 61.8% level in a bearish manner, tested exactly to the 78.6% level, and we have seen the market be rejected from there in a minor way and fail to close down below there. So a minor amount of doubt about continuation of the trend, but really not terribly significant. The important level here is the 100% level that is just at the 1600 level. So we should watch the market and how it reacts around that level if we do see the market trading down there. In terms of the Fibonacci retracement, we've traded in a bearish manner down through the 50% level and the 61.8% level, testing roughly to the 78.6% level. It's likely the market will trade through there and test to the 100% level, which is at 1598. And all of this, both of the Fibonacci techniques combined with the 1600 round number level of support, previous resistance, does suggest that we should find some very solid support down there. In terms of Ichimoku, we still have a bullish market in the long-term time frame, with the market trading up above the cloud, and as we move into tomorrow's trading, the top of the cloud moves closer to the 1600 round number level of support. So very, very solid support at 1600 and just below, and extending all the way down through to this important level around 1555. So very, very solid support down below where the market's trading at the moment. In terms of the Kijun-sen and Tenkan-sen, both of those, the market is trading below both of those indicators, suggesting that we have a negative market in the medium-term time frame and in the fast-term time frame, and suggesting that this market has a good probability of testing at least down to the 1600 level. Looking at the Kijun-sen, that is now pointing flat, and that does suggest that there is a possibility of the market testing back up towards that flat Kijun-sen. So let's watch for a potential higher high and higher low, but I'd say that the more likely scenario here is that we see the market test down to the 1600 level, we see the buyers come back in, and then we see the market trade higher. Looking at the Chikou span, that is now down below the corresponding price action. So with the Chikou span is now failing to support what we're seeing in that longer term time frame, with the market trading up above the cloud, and that does raise some doubt about the potential for 1600 for the 1600 level to hold. But I suggest that with the cloud trading around there combined with the Fibonacci techniques, that we should see the market bounce off that level once again. The extent of the cloud is quite large, and as we move over the next week or two of trading, the cloud actually moves up towards and beyond the 1600 level, and the thickness of it does diminish to a degree, and as we move through the next few weeks, there may be a possibility of the market breaking out to the downside, but certainly no sign of that happening yet. So overall, a bullish market in the long-term time frame, bearish in the medium and short-term time frames, a bearish candle, very solidly bearish, a likely test to 1600 to the 1600 level is on the cards.